Good morning, good afternoon for everyone attending across the country. Thank you for taking the time out of your busy day to join us today. My name is Tim Nguyen. I am the CEO and co-founder here at BeSmarty. We're a mortgage point of sale, and today we have two of our key partners on the call that I want to introduce to you. The first is Miles Johnson, president at Turbo Insurance Group. Miles, you want to say hello?
Yeah, good morning, everyone. Once again, pleasure to be with you. Thank you for taking some time out of your day to be with us this morning. Hope you get some good information out of this webinar.
Wonderful. And we also have Justin Glass, Senior Vice President over at United Wholesale Mortgage. Justin.
Thank you, Tim, and thank you both to you and Miles for getting on today. You guys have both been great partners, so I'm excited to be invited to be among such great individuals and companies today.
I appreciate those comments. Thank you. Well, I am super excited today to kick off the webinar. Today, we're going to talk about homeowners insurance. We're going to talk about three distinct things that you can take away today and start applying in your business. And you have the partners on the screen to take advantage of it all. The first is we're going to talk about how you can actually take this process that's so necessary, streamline, and literally create and reduce our operational expenses related to this process. We'll talk about how it's embedded into the consumer experience, how it supports the back-end operations. Number two takeaway is we're going to show you how it creates a new data point that does not exist in your business today that will help you increase retention for the long haul. And lastly, we'll also talk about how this can also be a revenue stream, something that can monetize, and no longer can it be a cost center in your day-to-day operations, but it could actually become a margin center. And we'll talk about how you can do that in a compliant manner. So we kick it off, Miles. So we're breaking up the three sections, right, Miles? If you go ahead and jump in, love to learn more about this process.
Yeah, absolutely. It'd be my pleasure. So as Tim said, today we want to tackle three pieces that are in and around homeowners insurance and how homeowners insurance is integrated into the loan closing process. So problem number one, the homeowners insurance process requires multiple parties, is often wedged into a complex process, and puts pressure on operational costs. AKA, it is wildly inefficient today in its current format. And so what we have done here at Turbo, we have created a very smooth, frictionless process to allow borrowers, processors, or loan officers to obtain homeowners insurance in an embedded experience, staying in the point of sale system environment to shop 50 different carriers, properties, and clients in all 50 states, and sending back a homeowners insurance quote that is digitally bindable. So you take an experience that may generally take a borrower several days and a lot of due diligence, very cumbersome process, and you make it in about 45 seconds embedded in keeping them into your ecosystem and environment. So it's really, really slick. It's really, really convenient, and consumers love convenience, right? They don't want to go out there and become an expert in homeowners insurance, nor do any of your internal staff members, right? And so through technology and automation, we've made it a very smooth and simple process that can now take the homeowners insurance condition of a loan from being one of the last and something that people struggle with getting documentation on, and making it the very first and getting that documentation up front, oftentimes within the first 1 or 2 days that escrow is even open. And so we can show some demos offline to people on how that embedded insurance solution works, how it does simplify the process so much for borrowers, loan officers, processors. But we are already embedded and integrated on the BeSmarty platform, as well as the Blink Plus platform with UWM. So if you utilize those platforms today, you can already turn that on and begin to benefit from this now.
Yeah, so glad
Thanks, Miles. And Tim, I just wanted to say from not only an efficiency standpoint, but we track obviously a lot of the stuff at United Wholesale. This is one of those conditions that was taking 3 days on average to bring back into get cleared by an underwriter. But we also looked at it a little differently. By being able to get the insurance quotes up front, it actually helps speed up getting the CD out the door. So if you're waiting on getting that closing disclosure out for various items, obviously HOI being one of them, This was something we got very comfortable with, knowing how accurate their quoting system is, to be able to use these quotes in order to get that CD out faster. So that's been a huge advantage. And then again, we don't have to wait several days to get a quote anymore, or even the bound policy. We can get that right away.
Yeah, thank you for pointing that out. It's live on production today. Miles or Justin, can you talk about any other successes with the live production usage of this through the thousands of link brokers today?
The biggest thing for us, not only among the efficiencies, has been what I call stop the shop. And so if you allow your borrower to go out on the internet shopping for their own homeowners insurance, you have a real big problem, because right now, a lot of the mortgage companies have gotten smart, and they know that mortgage traffic is very expensive to buy depending on the market that you're in. And so what mortgage companies have started doing is buying insurance traffic. So if someone's searching for insurance, then those mortgage companies are using that as a trigger to try to reach out and start to target those borrowers. So I call it the stop the shop. Don't let your borrower go out and shop on their own. Bring them into your own embedded experience. That way you're controlling the entire process, and you have less chances for them to get solicited.
That's really good information. I think on the next slide, we have some screenshots of this actually being embedded in the product. Miles, can you talk to this?
Yeah, absolutely. So as I referenced, the embedded insurance experience, what makes this so frictionless and convenient for borrowers or for your own internal team is exactly that. We are doing what the consumers historically have had to do on their own and just stumble through. Now we have aggregated it all together and kept it in your environment on a very clean display. So what you see here is the actual true embedded experience that is on the BeSmarty platform. So with just 5 pieces of information, name, date of birth, property address, and contact information, we can take those data points and push it onto our rating panel. That rating panel consists of 52 different insurance carriers. So you can have the peace of mind that we are doing real due diligence to shop the market on behalf of the borrower. Our AI and machine learning will then pick the best 3 or 4 options and pop those back into the environment once the borrower or processor LO is done with the application. At that point in time, they can review the numbers. They can see the quotes and the premiums right next to them. They can see who it is, right? You're talking about A-rated, large national brands that people are familiar with, and they can choose one of those options right then and there. And so, again, we can take a condition that historically takes days, if not weeks, and have it done on the first day and all of the documentation to all parties that need. And so, again, it's all about speed, it's all about efficiency, and leveraging automation to provide a really great front-end user experience.
Yeah, 2 things I want to point out from learning about HOI and the mortgage process, especially with you, Miles, is first is opt-in. So if you're a Blink UWM, if you're a UWM originator today, you have this available. This can be turned on with just a simple request to your account manager. Number 2, consumers, this is also purely opt-in if you choose to introduce this. We hope that you do, and what you should also know is if you do, it doesn't deteriorate. It's not cumbersome. It doesn't block the application conversion. It's very inconspicuous. There's opt-in, there's confidentiality, there's security requirements. It's very transparent. It's just literally weaved into the experience. So it's not like your borrower has to take an off route to do something. Again, going back to Justin's point, stop the shop. It's all embedded. And
yeah, that's a great thing to point out.
Conversions.
We would never want to disrupt the lending process whatsoever. We truly want to be a value-added service to people. We want to provide these products to folks that would like to utilize the service. By no means is it ever a requirement. And we do everything internally in-house. So we never share or sell information, and we do all of the fulfillment in-house. So we're not a lead aggregator. We're not sharing this with other brokers. So you would never have to worry about your consumers getting 6, 7, 8 phone calls instantly, getting, credit trigger pulls, things of that nature. Nothing whatsoever. This is all internal, just Turbo.
Yeah, I remember as we were going through the implementation, the security and the privacy policies was very strict. Very world class. So thank you for reiterating that. I'm just curious, Miles. I think we have some curiosity here. What happens when someone clicks choose on one of these options that they like?
So great question. And depending on the carrier, we do have some carriers that'll give us full digital buying. So what'll happen is you'll get a message that pops back to you, congratulations. We'll make sure we get all the documentation over to the contact that we have. What'll happen at that point is a fulfillment agent will call and just verify a few details about yourself, the property, the closing date, the lender, make sure everything, I's are dotted, T's are crossed, and get that full doc packet over to both the lender as well as the consumer. For other carriers that may not offer a full digital experience, again, we'll have one of our agents contact them and go through a few more questions that may have to be underwritten, and then they can bind that policy in another 7 to 10 minutes. And so depending on location, depending on carrier, the insurance companies, have different levels of due diligence and comfortability of giving consumers the option to fully digitally purchase these products. But even if it isn't a full digital experience, it may be a one short conversation with an agent and it's done in 5 more minutes.
It's actually a good segue into the second point here that we wanted to talk about.
Yeah, absolutely.
Data here.
Yeah. So again, we want to just continue to reiterate how a task, historically a task that I'm sure a lot of processors, loan officers, business owners themselves have never seen a lot of value in, but you can actually change that and really use the homeowner's insurance experience as a differentiator for yourself and your business. And as you can see here, when we talk about speed and efficiencies, we're talking about real minutes and hours and days gained back for yourself and your staff. And again, for the consumer, and right now, what is generally seen as a very cumbersome process, going through a mortgage, a lot of documentation, a lot of different things that have to be done on a very short timeline. It's just one less thing to have to worry about. And so the top graph there, you see, it's the consumer time spent on shopping and procuring homeowners insurance. As you'll see, we can get it from, on average, 21 minutes in navigating several different websites to just over 4 minutes total time spent. And then again, for your internal team, when you're talking about touch points and follow-ups, conditions not being closed, on average, it takes about 6 days to get the entire doc file you need to clear that condition. We can do it in the one day, the very first day, because right up front, we'll get you the 3 pieces of documentation we know you need 100% of the time. Evidence of insurance with the correct loan number and mortgagee clause, as well as closing date, reconstruction cost estimator, and a separate invoice. That's one thing that we see that is very oftentimes missed, is a separate invoice in addition to the EOI, and we give all 3 of those instantaneously. And so again, it's all just about the convenience, the automation, and the speed, making your team more optimized and providing a great consumer experience. And this is all just on the front end. This is just with the purchasing transaction. We continue to try to do this and build long-term value for you over time, which is what we'll reference a little bit later.
Thank you, Miles. That's good stuff. Let's move on to the next one here. So talk to us about how this becomes a new data point, how this becomes a new competitive advantage, related to retention.
Yeah, absolutely. So beyond just being a great convenience and a tool to be utilized up front, obviously with the due diligence and the efficiencies we spoke about, one last thing to touch on with that is the actual economics, right? One thing that I didn't mention is right now on average, if we shop your insurance, the carrier that we're selecting versus the median in the marketplace is about $471 cheaper. So there is a real economic benefit and gain for DTI as well as your borrower in ensuring that they are getting a really quality product at a sound rate. Now, moving on to insurance as a long-term value and not just a transaction, what we now can do is give our partners an additional data point to utilize in the tracking and staying front of mind for their consumers. I'm sure everyone here is well aware that only about 25% of loan officers get repeat business from their past customers. And to me, that's something that we need to help combat together. And so what we've created is a system where we continue to edify the original referring partner and keep yourself and your brand front of mind with these people. Because unlike mortgages, insurance is a residual and renewal industry. So we are talking to these people 4, 5, 6 times a year about different unique things. We're continuing to build these relationships. We're continuing to build rapport with these folks. And at renewal every single year, we try to continue to deliver additional value, drive down their costs, get their coverages more enhanced, learn more about their life, maybe add additional products and additional risk management in and around things that are going on in their lives. Maybe they have a boat, maybe they have a secondary vacation home, things of that nature. And every single time we can help them achieve something or save them money, reduce their costs, better protect their exposures, we're going to continue to bring your name up and keep you in front of them, right? So, hey, Be Smarty Mortgage referred you last year. We were able to save you about $400. This year at renewal, we're saving you an additional $250 on behalf of Be Smarty, right? So we're just going to continue to brand you and make these people aware of why they're benefiting from these services. And one of the best and biggest ways we can do this is survey them at renewal and look at life-changing events. You know, are they getting prepared to retire? Did they have a child? Are they outgrowing their home? Are they starting to think about buying or selling their home? Are they in a position where maybe they're thinking about buying that secondary residence? All of those things where we can naturally have those conversations with these people and feed that information back to you all. Another thing that we do, and it's going to be on the next slide here, is we monitor them for refinance activity and try to get that information sent back to you guys. So here's a great example, and we field these by the dozens every single day. You all know much better than I do that next year there's going to be a refi boom. It's going to be a renaissance of refis because interest rates, more likely than not, will begin to come down. And what's going to happen is here and every other insurance agency across the nation, they're going to start getting mortgage e-clause updates by the dozens every single day. For us here at Turbo, when we field these requests, instead of just simply updating the mortgage e-clause loan number and sending the appropriate documentation off, we're actually building an algorithm that will flag these and send it back to the original referring partner. So, hey, John Doe, who you did a purchase with in February of 2023, we just got a request from Rocket in June of 2024 that they're doing a cash out refi, you know, and getting their interest rate down. And so that'll give you an additional opportunity and an additional data point to try to get back in front of these folks and get that loan back and keep it in your ecosystem and in your book of business. And so again, you can see here on our servicing advantage, we have those 5 unique touch points where we talk to these folks every single year. We really get to know them. We build that trustworthy relationship so you can continue to focus on new business and driving new loans. And you can help, you can utilize us more as your back-end account management team, and we will monitor them for engagement and activity and continue to keep you front of mind. And when those situations arise, get them back to you for those additional loans.
Yeah, to me, this was one of the most striking part of our relationship. What got me most excited about doing the integration and introducing it to the world. You know, it's one thing to save an operational cost, enhance the consumer experience. Cool, there's good gains there. One thing to turn into a revenue stream, which we'll talk about in point number 3. But to me, maintaining and protecting that relationship you have with your consumers, your borrowers, is the most important thing. That's going to drive the longest term success. So I just want to be clear about something. As you engage with the consumers through the year, the partner's brand, XYZ bank, XYZ broker, right? It's going to flow, their brand will flow along with your outreach.
That is exactly right.
Value.
Yeah,
Bank,
so
XYZ bank.
that is exactly right. So original lead source is a trackable field with our CRM. And so as such, in all of our touch points, it's automatically entered in. So every single conversation we're having with these people, it's on behalf of, right? And so we put our branding secondary or sometimes not at all, because again, we want to continue to edify you guys. We want to continue to drive credibility back, that brand awareness back. Because what I've found historically in my career is that mortgage and insurance relationships are a one-way street. it's very, very simple for originators to refer business to insurance agents. It's not so easy for insurance agents to refer business back to mortgage originators. And so I've tried to find throughout my career every single creative way I can to make that a more mutually beneficial relationship. And what I've found is that this is by far the best way for us to drive business back so you all can monetarily gain and continue to monetize your same audience.
It's like a free touch point, Miles, right? I mean, people would
Yes.
pay, and people do pay, thousands, if not hundreds of thousands of dollars every year to create excuses to reach out to their past clients with a value proposition, right? Instead of just calling them
Absolutely.
saying, hey, hope you're doing well. Now you have a different excuse to call them. Hey, I was just looking at things. It seems like, the carrier is going to be able to lower your monthly payment even more, right? And then even carrying into the refinance conversation, we all know, we've been in this business long enough. It's cyclical. Rates are going to go up. Rates are going to go down. When they go down, imagine the power in not just saving someone money on lowering their interest rate, but now you can say, hey, by the way, we also got a quote for you. We can now lower not only your monthly payment from your interest rate, but also from your insurance. And so now you're truly providing that value proposition to that consumer, which again is going to win them over and then win referrals long term. And hopefully you keep repeating that cycle and just building your business organically just through some simple strategies.
Absolutely. Not artificial whatsoever, very genuine as we're conducting our normal business. It's very, very simple for us to continue to keep people front of mind. 100% spot on.
At Be Smarty, we believe we're on a cusp right now into what we call customer for life, right? It's been a big topic for many years, but I feel like right now, the technologies, the world's really turning to a point where we can start moving in that direction quickly. And we have a term we coined here called 0-30. And then the whole premise of this is most people are going to put themselves in a 30-year loan. But to actually originate the loan, it takes months, right? So that's a zero component. So as an originator, you spend, you're the zero, unfortunately, right? You help people, you serve them, give them the right product, the right mortgage, you satisfy their needs at that moment. But that's a very short part of a 30-year relationship, right? And what I love about this is you can actually use a professional, provide value. I would have loved it if I got a call from my, loan officer in my first home or second home and say, hey, did you get that email from Turbo? You could save a couple bucks here. This is going to be beneficial. You up your coverage. You need more coverage. If that individual that is looking out for me and they're tracking me, that's powerful, right? That's that touch point. That's a relationship. It's not a transaction. So it's one more thing I want to be clear before we move on is, as the engagement goes out, marketing goes out, does that data kind of flow back to the original so they understand, when they should pick up the phone or when they should just let the marketing automation run?
Yeah. So for the most part, we're going to handle that internally on everyone's behalf and monitor it for what we would call like true engagement or opportunity. So in the event that someone answers a question, are you comfortable with your current mortgage interest rate? When someone says no, that's going to automatically alert us to send a note back to the original referring lender or loan officer. Same thing with, qualifying life events. Did you have another child? Are you an empty nester? Things of that nature. Anything that can dictate someone making a decision in and around their home or their finances. When people answer those questions in a certain way, that'll trigger that note to go out. And then, of course, the mortgage clause one is the first one that we built. And that one does go out automatically if we receive that on a file.
Perfect. Thank you. All right, moving on. So before we jump into this one, Miles, I just want to preface, when we talk about revenue stream, this is the information you're going to share is information that, been collected from our counsel. Obviously, Miles is a professional on the insurance side from his counsel. But please check with your counsel before you implement anything related to this. So Miles, take it away.
Yeah, absolutely. Not one size fits all. Everyone is different shapes and sizes. Everyone's business is a little bit nuanced and different. But for the third, again, you can take something that historically has been seen as a task, provides no value, maybe a nuisance, if you will, of getting homeowners insurance for every single one of these loans and the process historically that's been utilized to obtain said homeowners insurance. But in terms of what we've created and continuing to drive value back to the partner channel, what we can do in specific instances and circumstances is create an advertising stream of income. And so it is, above board and compliance in situations and circumstances, but really it's essentially just allowing us to advertise to an audience. That's it. Just, access to eyeballs. And again, it's always an option, always an opt-in, never a requirement, never a part of anyone's process, just simply gaining access, gaining access to advertise our services to another audience. And for that, we are willing to pay. And that would just be another way you could potentially monetize the audience that you're already working with. So again, if it works for your business model in that specific circumstance or situation, that's great. But again, it's just an advertising expense and a way that people can potentially recoup some of their own internal marketing dollars.
Yeah, and I think if anyone's interested, please call Miles. Miles has a calculator that can walk you through. Again, we're very careful on this topic. There's obviously regulation, so please check with your counsel if you're making decisions. Again, opt in, get it vetted, make sure you're comfortable with it. But it presents a third opportunity, not a required opportunity, but an additional opportunity if you so choose to go down that route. Okay, so Sabrina, I think we have some questions. So let's go ahead and jump right into that, the FAQ part of this.
All right. Hello, everyone. Thank you for joining. First question I have here is it RESPA compliant?
Yeah, so the services themselves are RESPA compliant. RESPA is going to look at, kickbacks, pay for play, performance, unfair competition, things of that nature. Just us providing a service or the option to provide a service, there's no kickback. There's no revenue sharing. There's nothing of that nature. So just turning on Turbo's service in your Be Smarty instance or your Blink Plus instance, that is RESPA compliant because it is truly an option that the consumer can opt into, never a requirement of completing the loan, and there's no exchange monetarily on the back end for settlement services.
Great, thank you. And then can we insure in all 50 states?
Yes. So Turbo is licensed and does business in all 50 states. And that's not, hyperbole. We truly do write in all 50. So, Hawaii, Alaska, Florida, Texas, California, all of the hardest markets, all of the hardest to place properties from a, $80,000 mobile home all the way up to a $12 million property on the beach and everything in between. We've truly gone to the marketplace and tried to find a carrier option and a product for every American out there because we want to be a solution for all homeowners, and with that being said, right, writing business in all 50 states is very, very difficult to achieve. And that's why we have so many carriers on our panel is because it is quite difficult to have at least one product offer for all of the different profiles across the nation, VAs, FHAs, jumbos, secondaries, all of the different things, right? But we have to make our technology and our product offering as robust as humanly possible, or we're not really a solution universally.
Great. Another question here. The Florida market is tough now, and to get the best policy for hazard, wind, and flood, it can require the combination of a private company policy with Citizens, the state-backed agency. Can you handle that?
Yes. So we're one of the top riders of Citizens, unfortunately, right now. And I say unfortunately because, as noted, Florida is a tough spot right now. Within the last 12 months, we've had 4 different carriers that we represented go insolvent. I think there's been 25 total in the state of Florida that have either gone insolvent or just pulled out completely. So Florida is in a bit of an emergency. And thankfully, Citizens does exist. Citizens is backed by the state of Florida, the government there. So there always will be at least that option for homeowners, but it's not a great one. And everyone knows that. And the industry is really trying very, very hard to figure Florida out and how to make it profitable. It's at a little bit of a crux, but this has happened before and they figured it out. They'll figure it out again. But yes, we do represent Citizens. They are a massive rider right now in the state of Florida. But there are some other players that are starting to enter the Florida marketplace with some unique twists, some different policy forms. So stay tuned, but it is definitely an industry all hands on deck to try to figure out regions like Florida.
But you were even able to save my parents money going from Citizens to New Citizens. So again, it's still a value proposition of a conversation to have. You know, again, just because you're with Citizens doesn't mean you can't get a better rate through Citizens if someone else is shopping that for you. So just keep in mind there's, again, value propositions along the way.
Yeah, that is correct. And again, Citizens is a unique animal. You know, they try to depopulate their book of business every single year. So you can, help drive people's costs down, even internally within Citizens. And it all is about expertise, right? And thankfully for us at Turbo, we have several agents that are domiciled in Florida that are our true Florida experts. And so we're fortunate to have them. And in turn, our audience, our consumers are the benefactors of that.
Sabrina, before we move on to another audience question, Miles, is there any other state or any circumstance, any legal or environmental changes coming up in any state that we should be aware of?
Yeah, I mean, the other one that is a giant struggle right now is California. California, more so for the regulatory environment, the DOI, the Department of Insurance in California, is really, really difficult for the carriers to work with to get rate filings through. So oftentimes what will happen in California is carriers are waiting years to get their new rate sheets approved so they can start charging adequate premiums in the state. And while that backlog is happening, they'll just pull out. So right now, there has been a ton of carriers that have just simply stopped writing business in the state of Florida, or excuse me, the state of California. And so when they do that, all activity ceases. And that's really, really hard for the marketplace because you're seeing a huge shrinking optionality. And what that has done now is it's brought a huge rise in the California Fair Plan. The California Fair Plan is essentially California's equivalent of Citizens. So it's a state-sponsored insurance program for people that can't get insurance anywhere else, but it's running into the exact same problems that Citizens has. The policy forms aren't great. It's really a last-ditch, last resort product. But what's happening is the carriers and the regulators are at an impasse. And so the people that end up losing are the consumers. And so, yeah, that's another one that's on everyone's radar because it's almost weekly where you'll hear about another carrier ceasing operations. I'm sure a lot of people maybe saw Geico completely pulled out of the state of California. And several of our carrier partners throughout the last 18 months have stopped and started and stopped and started accepting new business. So that's another one that we keep a very keen eye on. Some of the others that you may think, like Texas, Louisiana, those have been such catastrophe-prone areas for so long that the carriers have figured it out already. But with California, it's really regulatory. And with Florida, it's a lot of regulatory, a lot of very litigious society, a lot of lawsuits there, in addition to the weather.
Thank you. Back to you, Sabrina.
Thank you. So another question here. Do we insure different property types, for example, manufacturer?
Yeah. Great question again. And yes, property types, all shapes and sizes, manufactured mobile homes, condos, a single family residence, duplex, triplex, fourplex, even commercial properties. We can do it all. We are true property generalists. So yes, we can do all different property types in all 50 states.
And then do you only provide insurance for homes?
We do not, no. So great question again. I appreciate that, Tia. And no, obviously for the purposes of this audience and this conversation, we want to talk a lot about our automation with our homeowners insurance embedded experience, but that is absolutely not the only thing that Turbo does. and that is not how we hold ourselves out. We are a true holistic risk management team. So when we start to have these conversations with clients, we want to get a top-down picture of what's going on in their household. What's the auto look like? Do you have recreational vehicles? Do you have children? And we want to provide sound risk management and products that will protect that entire household in all of the exposures, not just property. So yes, auto, home, life, pet, commercial, business products, all of those things we do provide here at Turbo.
Great. So whose products are you selling?
So we are a broker. Sometimes people think that we are a carrier, and we are not. So we are a broker. And again, like I said, we have contracts with 52 different insurance companies. All of them are A-rated by either AM Best, Standard & Poor's, or some kind of rating agency. So you're never going to have to worry about a product not being lender compliant. And we represent all of the majors. So, the Allstates, Liberty Mutuals, Travelers, Nationwides of the world, Progressives of the world. We have all the large national brands. And then we sprinkle in a lot of what we call super regionals. Super regionals are carriers that have great footprints regionally. The Pacific Northwest, the Southwest, the South, the Gulf states. You have to have those nuanced players to really be a solution for folks that live in those areas.
So we have 4 more questions here. One of them being, how can we do an exchange of information?
Great question. So we do it several different ways. What we've been referencing today is a full API embedded experience. And again, that's available today on the Blink Plus platform. That's available today in Be Smarty. And really that is just a single opt-in button. So a checkbox where your consumer would opt into our services and receive that insurance rate pop back to them in the environment, in the ecosystem, to reference what you saw earlier today. Beyond a full API experience, we do create co-branded portals for people that we partner with. And so, Be Smarty Mortgage in Turbo Insurance, we could create a portal where your internal team or your borrowers could go and put those 5 pieces of information in and receive those rates back just from a simple URL website. And so we do create those as well for our partners to make it very simple and easy. And then even beyond that, we have the capabilities of accepting live transfers from, partner large call centers. And we can really be creative about any other kind of ingestion point if there was a real business case for it.
Okay, and then where in the process do we fit in to make it frictionless?
So that another great question. And for us, what we feel is at the very beginning. So as soon as someone has already been pre-qualified or is getting pre-qualified to put that offer in on the home this weekend with their real estate agent, that is the perfect time. The sooner the better, because we want to get this condition done and out of the way for everyone. And we want the homeowner to have one less thing to worry about through the escrow process. So we try to get to them as soon as escrow is open. As soon as the offer on that home has been accepted, that's when we want to be introduced. That's when we want to get the insurance in front of them. So again, it's solved almost instantaneously in one less variable at play.
Okay, and then what do we do to make insurance a long-term service?
So for us, that's really what we handle, right? And for us, we want to just continue to change the paradigm of how people think about their insurance products. Unfortunately, with the rise of the internet over the last 20, 25 years, insurance has been very commoditized. People just think about it as a cost, right? And they want it for as cheap as possible. There's not a whole lot of respect or value being added on understanding your insurance, understanding your coverages, right? People only really care about insurance at 3 times, when you need to file a claim, when you have to buy it, or when you're renewing it. That's essentially when people are thinking about these products, right? But we feel like we can really change that. We can educate people on their coverages. We can show them that there are real benefits for using your insurance. We're not going to try to dissuade people from filing claims. We're actually going to show you all of the different scenarios and situations where you can use your insurance that you've never been educated on, right? There's so many additional benefits to these policies, both home, auto, and others, that folks are just simply unaware of, quite frankly. And so we feel with real true education and understanding, people will start to think about their insurance policies differently. And then again, getting them away from thinking of it as just a transaction, just a product that I have to purchase. Don't think about it as a single moment in time. Think about it as an ongoing value for yourself, for your family, and for your financial protection. It's another financial tool in your overall financial plan, right? And so we can continue to review and add coverages and additional lines year over year over year as consumers' lives are changing and evolving, and just being a partner with them along on that journey.
So if I have a policy written with various agencies, can I still feature my data? Or what do I do with my old clients that had HOI before this?
Yeah. So another great reference point. And yes, so in the past, what we have done with partners that we onboard is we can do a past client blast, just introduce the partnership, the services, what we can do for them, and try to start to deliver this same value go forward to the folks that have done business with you in the past. And so we have the capabilities of doing, mass marketing to past clients, things of that nature. And that is something that we can entertain on a case-by-case basis.
So this is kind of an interesting question, if I can deep dive on. So I think the way this question is being asked is, if a client of Be Smarties, for example, for the last 5 years, they've done, call it 5,000 policies. Can they feed that data to Turbo so then you can start your marketings, your retention strategy? Or does it have to be net new starting on day one, go live?
No, so phenomenal question again. And yeah, so we could be warmly introduced to all of those past clients to see if we could, provide them some value and get them into the Turbo ecosystem. So we absolutely can take that on as an endeavor together.
And do we have any more questions, Sabrina?
We're all good for now. I think we're good to wrap it up.
Well, hopefully everyone's as excited as I am. 3 takeaways, right? Reduce your operational expenses, retain your customers, and if so interested, potentially a revenue stream as well. Sabrina, would you mind going to the last slide, please? Thank you. Might have been a delay on my screen. So contact information is in front of you. Miles at turboinsurance.com. Feel free to reach out to him directly. If you call that number will go to Be Smarty. We'll be happy to redirect you and get you in contact with Miles if that's the only number that you have. And you can always reach myself at tim@besmarty as well, .com. So with that said, thank you everyone for taking your 4 or 5 minutes out of your day to spend time with the folks at Turbo Insurance and UWM, and of course, Be Smarty. Miles, thank you for your time and expertise, and Justin, the same as well.
Thank you.
Yeah, my pleasure. Thank you so much. Proud to be here, proud to be partnered with these other prominent brands in the space, and feel free to reach out to us with any and all questions.
Wonderful. And I do believe, Sabrina, after this webinar, a video will go out. If you have other folks in your company that you want to forward this over to, please do. And also be available for those who have registered but could not attend for this particular time slot. Thank you, everyone. Have a great day.
Thank you so much. Everyone have a great day.